Not good. The national debt is so high, and the central banks, including the Federal Reserve, which is actually the U.S. central bank, by the way, they're not even purchasing their own debt. They haven't really purchased anything other than $10 billion in Treasury bills this per cycle. So that means per quarter. They've been purchasing $10 billion. So we're into $30 billion from the Federal Reserve because quantitative easing or tightening, whatever you want to call it, we're going to get into exactly what it says because you can monitor all this stuff from the Federal Reserve itself. Absolutely. Here we go. Foreign banks have not invested in the U.S. Treasury bonds since 2014. It started in 2010, actually. In the mid-2010, they declined to share this information, but the U.S. debt is basically on a roller coaster ride. And official ownership of these debts have been private equity investors like Blackstone, BlackRock. It says it right here. Private investors, private and foreign investors are the only ones buying up these bonds. We don't know who they are. As far as we know, they could be the drug cartel. We don't know who's buying them. But the United States don't care who buys them because they got to pay them out anyway. Declining share as a percentage of the total U.S. debt from the federal debt itself. Foreign officials' ownership has shrunk from 30% to a decade ago low to under 22%. So it's even lower than that now. Market share. Private investors now account for roughly 60% of the Treasury market. Okay? Those are private markets. Okay? But it is up from 37% since 2014. Private equities, private investors are buying up our Treasury bonds. So the Federal Reserve, which is the U.S. central bank, that's exactly what it is, because that's exactly what it says it is, acted as a massive buyer during the Great Sickness, okay? When everybody was sick and everybody's going, nobody could work, okay? We were all stuck at home. But they have also eased up on how much bond debt that they're buying up with our own reserve currency, okay? They're not buying it either. How much of it they're not buying? Well, we're going to get into that right now. The Federal Reserve purchased over $4 trillion in U.S. Treasury notes and bonds during the Great Sickness. And they have purchased less and less securities, roughly 2.5 trillion up to 5.8 trillion since from 2022. That was it. They have not purchased anything after that, okay, since 2022. Their last purchase after 2022 up till now has only been $80 billion. So they don't want the U.S. Treasury, the central banks, like the ones that run everything, like basically, you can just say any of the big banks that are out there, okay, that run the Federal Reserve. I'm not getting into all that, okay, but they're not buying it, and the U.S. market from the foreign central banks don't want the debt, and we don't want the debt. That means the currency of the world currency, and our own vice president has even stated it himself, that the U.S. is looking to get out of its own, basically, ownership of the world, to get out of the U.S. currency being the world leader in the currency. Iran is proving this because as the U.S. is the world currency, as the debt itself, people don't want to invest in it, and people don't want them to control how they invest their own country's money like they did to Russia. They're doing it to Iran now. They could pull the rug out from their investments and the bonds that they would buy through the U.S. Treasury Department. And they're like, well, if your own country don't want to buy them, in wartime you can pull the rug out from us and we can't get our money's worth out of the Treasury market, then we want more money. If we're going to invest in your debt, then we want 5%. So these currencies and Federal Reserves that are buying up all the Treasury bonds from foreign investors from the private sector, which is Iran, saying if you want us to buy this, then we want 5 to 6%. So that's going to raise me and you's bond rate for us to borrow from the banks to borrow from. I'm talking about like the regular banks and the reserve interest rates for 6%. So that means me and you that want to buy a house for $400,000 and then borrow plus the bank's reserve interest rate at 4% is now going to be 9% for me and you to buy a house by 2027. You don't think I'm wrong? You better do your math, people, because I know I pay attention to this stuff. And I don't care what all the other YouTubers are saying. They have their own interpretation for this. But by next year, if nobody wants to buy our debt, which that's exactly what's happening, there's going to be no growth because the banks don't want to lend, and the Small Business Administration, where they get their bonds to lend from the banks to the businesses, are going to be at 9%. There's got to be nobody at 9% that's going to be in business anymore. I'm talking about, you think cars are 50 grand? They're going to be even more than that because they got to base off the manufacturer standpoint of that car all the way up to the purchase level at 9%. So at 9% interest rates of the borrowed rate for GM to build that car for me and you to buy is going to be a $70,000 basic car. So you guys can look at it however you want, but we're all screwed. And they know it. They know that the U.S. currency can no longer hold itself through the bond and the Treasury bonds itself to stay afloat in any circumstance anymore. There's no way to vote yourself out of this. I don't care who you vote for. They do not, your congressmen and your politicians do not hold the reserve currencies in the world, okay? They're just like anybody else. Maybe they might make $2 million a month and whatever they're doing because they're working for the government. But they do not hold the world's wealth. The world's wealth is held by gold. Gold holds the world's wealth by its balls. And if you really take the world's wealth in gold and compare it to the bond markets and the stock market and the private equity firms, it's like 1.25% of the gold what the gold standard would be right now. So absolutely, gold is what is holding everything together because everybody's money is valueless at this point if they keep going with the reserve currency of the U.S. dollar. It is bankrupting this world. Have a great day. Don't forget to, right here on the instant results, I'm giving you the instant result of what's going on our planet. So go ahead and please subscribe if you want to hear more of this stuff going on in the world and why the U.S. doesn't have any money and why you don't have a job and why everybody's firing you and why it has nothing to do with AI at all. It has to do with borrowed money, borrowed time through our tax division to buy up bonds that even our own state doesn't want to buy anymore because they can't afford to buy them at 9%. Because Iran is a private investor of these equity funds around with the bond markets, and they want more money out of me and you. That's a direct threat, a direct security risk from everybody in America, and we should be pissed about it. It's like, you know what? You call your senators in your state and talk to them on the phone. So you know what? not only are you going to get out of Iran, you're going to get out of the whole country over there. You're going to come back to the U.S. and you're going to start digging for gold. Have a great day, everybody. Because nobody can vote their way out of this. Period.